We have seen a lot of successes in the market with banks actually building a lot of distribution franchisee through co-brand partners rather than going through the traditional channels of DSAs, branches, etc. I remember when earlier we used to walk in a mall and there used to be a DSA at every booth, selling a credit card. And now Amazon ICICI, as you said, has sold more than 5 million cards. That really talks about how Fintech, Infra and co-brands have changed the concept of banking.
I've always believed that the success of a co-brand is pretty much proportional to the loyalty program that underlies it, which is why traditionally the most successful co-brands have been airline and hospitality programs, because those guys got loyalty better than most other sectors. Now, I'll give you a few examples. I'm reminded of Delta Airlines. I was in the US a few years back, and over there, they actually charge you for cabin baggage, right? They don't do that here. But I was taking a flight from SF to Seattle to attend something at Amazon. And Delta basically said, you have this check-in baggage, so you pay $30 for that. But while checking in, if you apply and get yourself a Delta credit card, a co-brand credit card, which I forget who was issuing it, I think it was JP Morgan or Citi, one of those, then you get that $30 discount immediately on this particular flight, right? So that's what we call purchase path acquisition in the industry. The Wyndham Rewards program, the Wyndham is this global hospitality chain, and they have this program which simply says you accumulate 15,000 points and you get a free night at any of our chains around the world, right? So that's the power of simplicity. Once again, we're speaking about loyalty and rewards. That's the power of simplicity in a rewards program. How easy is it to earn loyalty, and conversely, how easy is it to burn loyalty? Those become extremely important.
The whole advent of APIs, which happened in 2014-15, coming on the corporate side, really changed the scenario in a big way. And the whole digital payments push, what you see over the last decade, has been a journey which has existed because of fintechs and bank partnering together. You go ahead and check the volumes that are happening on any of the payment systems in India today. Would have not been possible had the fintech infra companies not been in there and partnering with banks.
We strongly were inspired by the story between the rabbit and the tortoise that we heard from childhood, and I realized at 40 years of age that my parents and teachers were making a fool out of us, that the tortoise won the race because it was slow and steady. The tortoise actually won the race because there was nobody to wake up the rabbit in time, and that's what Fable is trying to do with the banks. So we've been sleeping on the cross-border business for the last probably 300 years, and the so-called slow and steady fintech world is trying to take that over. And in my opinion, if you're not building your own core banking, then why are you so worried about building peripheral items? It's like Mercedes-Benz trying to build the car and outsourcing the engine, but saying tire or battery main banaunga. Customer at the center is the critical success factor, in my opinion, of any business in general. If we are not able to think of what the customer wants, our solution becomes redundant very quickly or becomes useless. So we have to constantly think of that so that we can go to our clients and tell them, you concentrate on getting that customer because that's what your job is, and we'll try to write in Java at the same speed that the regulator is writing in English. So we'll take a cricket analogy. Cricket was started 200-300 years ago. Everybody played only in whites. They traveled by ship, then they started traveling by air, then they started playing in colored clothes, then with colored balls, white balls. But cricket has remained the same. It went from test matches to 50 overs, 60 overs to 50 overs to T20. All this evolution has been approved with the International Cricket Council, who is the regulator, right? So it's not that the International Cricket Council blindly said no. It just took them some time to make it popular based on the customer, which is the person who views the match, but while keeping in mind the various boards of cricket control in every country and keeping in mind the interest of the cricketers, so on and so forth. Just to make it easy for us to understand. So, many people went and launched, Kerry Packer went and launched a cricket series of his own. It was great for the industry, but it was not good for cricket in general, in principle. It was making players play for money rather than playing for the sport, and so on and so forth. So that's why regulation is important.
And the moment we talk about distribution, all of us think about the branches, like the way colleagues mentioned about from the bank point of view. Today, nobody thinks about the bank because the power of this physical infrastructure is diminishing. That's a reality. That said, only digital can help you to scale the way you want to scale. And to my mind, even not about just scaling, it's even to be sustainable. Bank used to be a major point of distribution for mutual funds, not anymore. You see fintech platforms, they are able to solve for many things, including distribution and then the management, the customer experience, and so on and so forth.
So a very interesting topic, very close to a lot of people's heart, which is the role of fintech infra and co-brand distribution partners in transforming the banking landscape. Not very long ago, banks had branches as their distribution channel, and they were very happy because the branches themselves had a lot of footfall, where people used to come in, and a lot of products then started getting distributed through these branches. As with the advent of smartphone, with the advent of digital technology, with the government pushing a lot of digital reforms, I think this has changed over the period of time. And banks realize that branches are no longer the distribution channel that they used to be. With that came the age of smart mobile apps, came the age of fintech infra companies for which helped in digital distribution, and co-brand partners, which then helped to distribute the products. So this has been, we have seen a lot of successes in the market with banks actually building a lot of distribution franchisee through co-brand partners rather than going through the traditional channels of DSAs, branches, etc. So my first question to you, Amit, is how do you think fintech infra companies have added value to banking, especially in the transaction banking, lending, and other domains?
I'll set it into two parts because I work largely with the wholesale banking side of the bank, but pretty much covering anybody other than the retail customer. So I would like to give a perspective in terms of how the whole journey has been and why fintech infra especially has been a very, very big boon, not only just for Yes Bank as such, but for the overall industry. The whole advent of APIs, which happened in 2014-15, coming on the corporate side, really changed the scenario in a big way. And the whole digital payments push, what you see over the last decade, has been a journey which has existed because of fintechs and bank partnering together. You go ahead and check the volumes that are happening on any of the payment systems in India today. Would have not been possible had the fintech infra companies not been in there and partnering with banks. Our journey has evolved where we started creating solutions to solve some of the problems which fintechs were solving for the outer world. So they wanted banking support to take care of those requirements. So that's where the focus started for us. Slowly and gradually we went into a co-creation approach where the solutions which could be required for the bank's customer, cutting across government, financial institutions, fintechs, SMBs, even cross-border. Okay, all of these solution stacks started getting created with the help of fintechs coming into the picture. So that's how the journey has helped. Now the way we are today currently going across is today the fintech infra companies themselves are evolving from a single product solutions and trying to solve beyond banking part of it for the bank, where they will solve certain problem statements which bank is unable to solve. But at the end of the day, a customer who comes to a bank or to the fintech company is able to enjoy all the product services which can be offered by the bank and the fintech company put together. So that's how I have seen the evolution. Coming to obviously the retail side of it, definitely co-brand partnerships have been a major success story for the bank as well on the credit card side to begin with. Definitely consumer credit cards is where it has done extremely well. Commercial credit cards, yes, the journey has begun. It's been a little bit slow, but we expect it to get caught up in the days to come. And prepaid has its good and bad success stories because of the use case actually what you really target on, so which maybe we'll talk more in detail. But clearly the way we look at it and what Chinmay also alluded, banks are not looking at DSAs nowadays. So DSAs definitely will remain as a one way of doing business, but the more partnerships that you have and meaningful partnerships which are solving specific problems for certain set of customers is the way we see the roadmap going up.
Lovely, that's very insightful, Amit. And one word that I took away was co-creation. I think fintechs and banks and co-brands today are co-creating to solve problems. So that's a really great perspective. So from a network perspective, what's your thought about this topic about fintech infra and co-brand distribution?
I'll pick up once again from Amit. He spoke about meaningful partnerships. I think that's what we do as well. I call myself matchmaker in chief at Visa. So I think in terms of the way we look at co-brands, I think Visa has been at the forefront of several fintech and merchant co-brand partnerships. In fact, we run what is the largest ever co-brand in India, which is the Amazon and ICICI Bank co-brand, over 5 million cards issued now over 6 years. I was actually involved in the launch of that back in the day. Even with our newer fintech partners, the likes of OneCard, Neo, Epify, Jupiter, Scapia, Bank Bazaar, the list goes on, right? So we run pretty much all the large fintech partners that work in a co-brand partnership with banks today. And you have a whole lot of banks sponsoring those, Yes Bank being among them. So a pretty large ecosystem and continuing to grow despite several pushbacks from the ecosystem and so on. Now, what's really been working for us as we see it, I think, is a very clear sort of demarcation between roles and responsibilities of all the partners, right? So when we think about fintechs and merchants, the role they play, so they bring superior UX, user experience, the way to promote offers and CVPs without carpet bombing. So very good segmented, targeted campaigns. They have exceptional data expertise. So the kind of analytics we see from our fintech partners are pretty unparalleled. In fact, we work with quite a few of them when it comes to data related exercises and so on. So that's the kind of expertise that fintechs bring. And when it comes to banks, obviously they bring compliance. That's as important as it gets. It's probably more important now than ever before. So they bring compliance, they bring superior risk management into the ecosystem. So fraud risk, operational risk, credit risk, underwriting capabilities, all of that from years of experience. I think that's something really important when you think about their role versus some of the fintechs which are new to this ecosystem. That's one. And then the other thing that they bring is experience of scaling up products and solutions, right? So they've been working with multiple segments that fintechs work with for years. So they understand the segment very well. They know how to scale up products, and more importantly, they know how to cross-sell. So deepening relationships with customers, be it consumers or be it small businesses and corporates, all of that I think banks know fairly well from experience. So it's a good meeting of the minds. It's a good meeting of expertise, of capabilities, and once that happens, that's when meaningful partnerships take place, right? As Amit put it. So that's what we really see happening, and examples abound of that.
That's lovely. So I think I remember when earlier we used to walk in a mall and there used to be a DSA at every booth, selling a credit card, and now Amazon ICICI, as you said, has sold more than 5 million cards. That really talks about how fintech infra and co-brands have changed the concept of banking. Naushad, you run one of the most fastest growing cross-border fintech infra company. What's been your experience with banks?
So Fable is called Fable because we strongly were inspired by the story between the rabbit and the tortoise that we heard from childhood. And I realized at 40 years of age that my parents and teachers were making a fool out of us. That the tortoise won the race because it was slow and steady. The tortoise actually won the race because there was nobody to wake up the rabbit in time. And that's what Fable is trying to do with the banks who've been sleeping on the cross-border business for the last probably 300 years. And the so-called slow and steady fintech world is trying to take that over. And in my opinion, thanks to the same things that Abhinav just mentioned, ability to manage risk, ability to manage compliance, and of course having the trust, the implicit trust of the customer. I think they are in our business, in the cross-border payments business, banks are the best poised to participate and evaluate this whole ecosystem and the value chain. So that's our focus, to help banks become fintechs in at least our domain. And the way we explain it to them is to say that if you're not building your own core banking, then why are you so worried about building peripheral items? It's like Mercedes-Benz trying to build the car and outsourcing the engine, but saying tire or battery मैं बनाऊंगा. So that kind of is our basic reason and purpose for existence, to try and make help banks enable banks to be able to do the cross-border business as well or better than any fintech company.
Vasant, we've all been speaking banks, RBI compliance. You've been a veteran in capital markets, insurance, and those industries. So what is the view of that industry for fintech infra companies and co-brands? Can you throw some light on that?
Yeah, certainly. I think what we spoke about, I think what is more familiar to all of us, perhaps in the room, maybe some could be exceptions to that. There are lots happening in the world outside of banking. Okay, today, a couple of days ago, I think RBI governor made this mention in the media while he was talking, speaking in a conference. The growth of savings is going down phenomenally, and that shift is happening towards a portfolio which is a mutual fund. We are in a nicely in a position country where investments are happening in all-time high, as all of us are familiar with. The kind of infrastructure that is required to run that machinery, it's not a small effort at all. That said, all these are still not very visible to the outside world and the market. In CAMS, we run the largest of the repositories for mutual funds and insurance and so on and so forth. And if you ask me a few years ago, by the time I joined this group, 80-90% of the work would be done physically, if not digitally, to most part. There will be a lot of paper-based processing and so on and so forth that look into 2024, we are thinking about 90%, 95% of work done digitally. That is helping us to really enable. I was sharing some notes with the panelists early on the day. We were like a real fintech company even before the advent of this term called fintech. Okay, but we have been that's been growing in a much slower pace. But thanks to all the interventions that are happening through pandemic and through other infrastructure that is being put in place, we are seeing seismic shifts in terms of what is happening in the ecosystem. I'll give a few examples to talk about mutual funds and that related businesses, and also some on the insurance, right? Mutual fund today, if most of them, the last 10 AMCs that have been licensed by SEBI, they're all digitally native, which means that they don't depend on, the moment we talk about distribution, all of us think about the branches, like the way colleagues mentioned about from the bank point of view. Today, nobody thinks about the bank because the power of this physical infrastructure is diminishing. That's a reality. That said, only digital can help you to scale the way you want to scale. And to my mind, even not about just scaling, it's even to be sustainable. Some of those industries look deeply underpenetrated, especially the capital markets like mutual funds and so on and so forth. Even though we have a lot of news and views about all of this, we are still talking about a 4% penetration around that for both mutual funds. The mutual fund should be touching about 5% now. But insurance is still, we are doing about 4% penetration of the market, which means there's a huge amount of headroom, and there are a lot of inherent demand for, scaling up our businesses in all these places. And I'll give a reference, a Western reference. Go to a place like the North America, 80% of the savings done on mutual funds. Here the reverse is happening. We are talking about 20% savings on towards mutual fund, the rest on the other methods, other products that are available, like bank savings, fixed deposits, and so on and so forth. Now, talking about the infrastructure, mutual fund actually has completely transformed. I was talking about the net new AMCs that are getting added to the ecosystem. All of them are purely digital in nature. Today, we can't think about somebody setting up an AMC in the traditional way or the physical way that they would happen. Typically, it takes about 2 to 3 years for any AMC to be set up in this country. Okay, we spoke about compliance, regulation, what needs to be set in place. Those days, SEBI would demand that you need to have minimum 300 touch points within the country to be able to ensure that you launch your own funds, and then your ability to distribute your products through those places. Today, all this is gone. CAMS, for example, we have a APS stack which any net new AMC can consume, we can practically get them off the ground in a matter of about 2 to 3 months time. Okay, what used to be years, now it's happening in a matter of 2 to 3 months time. Again, I say this keeping in mind all the compliances, the audits, the checks and balances that need to be done by the regulator and the other ecosystem providers, right? That said, that has solved for many issues when it comes to setting up the platforms. And the way we see it, this is going to win. Just want to give a reference point here. The last 2 years, the asset under management has doubled in the mutual fund ecosystem. It used to be under CAM's management, we used to have 25 lakh crores. Talking about in 24, we are sitting about 50 lakh plus crores of asset under management. Just imagine it's like, you know, putting some 20 mid-sized banks put together. That's the kind of, you know, size and scale that is growing. I still believe that there's a lot of headroom for us to grow and do this. So anybody wants to set up anything today, I think the infra is available. There are a few hundreds of APIs which anybody can consume. You don't have to build any interfaces. We are still in the making. There's a lot of work to be done. But having said that, it's fast evolving. This is the story of mutual funds. So that's the reason you see that all the now the distribution points for AMC is no longer their own shops, not their offices, not their touch points. Bank used to be a major point of distribution for mutual funds, not anymore. You see fintech platforms, they are able to solve for many things, including distribution and then the management, the customer experience, and so on and so forth. I think it's colleague again talking about UX and, you know, the interfaces and everything else. The fintech companies have come much more dominant when it comes to delivering all those experiences to the users. This is a story about mutual funds. Let me switch to insurance. Insurance, again, CAMS is incidentally the largest insurance repository in the country. If you notice about the way the structuring is done within the industry, bank I will put away on the top, banks way on the top when it comes to setting up infrastructure and standards and compliance and everything else. Insurance has always been a little closed. Okay, and they are beginning to open. They are forced to be more and more open today, thanks to the advent of all those digital-led, you know, platforms today, right? Digital distribution that's happening a lot. While there are enough fintech play available, what we famously call the insurtech companies, the traditional insurance companies are still not ready to embrace those kind of potential, you know, chances available in the market. So they are giving that push, and slowly we are seeing we are still in the nascent stage of, you know, realizing all this potential. But that said, there are very good initiatives taken by the government, first of all, and also some few fintech players. I'll name a few. I think Bima Sugam is one initiative that has been taken. They're building a huge amount of infrastructure, trying to bring the entire ecosystem together. Here, it's not the question about only the insurance companies and the related distribution ecosystem, more to do with bringing the banking ecosystem together, and also fulfillment of payments and so on and so forth. All these are disjointed journeys today. So that is getting sorted out, but that's at a very, very high level. Another example I want to give within CAMS, we run this under the branding called CAMS Repository, CAMS Rep. We have launched a platform called Bima Central. What we do here is to you know, create a marketplace. I don't want to call this marketplace. It sounds like, you know, it's a place where sales and distribution happens. It's more to do with creating a genuine infrastructure where players can come and participate, creating open interfaces between the ecosystems, making sure all compliances are done. Today, the biggest problem is that we don't know what compliances are. For a moment, let me talk about this KYC. I think this is the most utilized term today in a BFS segment. Every single industry does this KYC in a much different way. Okay, everything is unique. We got to look at all of this in a combined way, in a standards way, right? That is the way I think look at it. And I come from the payments world, where we started talking everything about standard. That's the reason why, you know, so many billions of transactions happen, and, you know, very little failures that happen within the ecosystem. Similar, akin to that, is what would likely to happen in this part of the world. So if you go to Bima Central today as a person who's insured, you have a full view of your portfolio and see where the gaps are coming through. And all this are thanks to the connects and the original interfaces that we have built with the ecosystem. This is nothing to do with, you know, we are promoting a particular insurance brand or something like that. But it took some time for us to create a runway for creating a public infrastructure. And so, of course, this is a regulated place, and we will see more of this happening. Still, I would think it's an nascent stage that we are in. Long road to go.
That's great insight, Vasant. In fact, very recently in Times of India, I read someplace that if, for example, if co-brands like ET Money and Grow go down for 2 days, the mutual fund industry AUM will reduce by 30%. So that's the power that, these co-brands, the Fintech infra that, builds these co-brand brings to the table. Amit, everybody agrees that Fintech infra co-brand is like Vasant said, it's needed just for sustainability. Not even for scale and other stuff. So, and I saw a lot of people in the audience also nodding, so I'm sure everyone agrees. So the big question to you is, what is the RBI saying about this?
Okay, so regulatorily, if I see the whole last 3-4 years specifically, okay, so the framework in India is pretty much evolving and supportive, if you largely see it from that context. The reason I would say it because the regulator is looking at 3 important dimensions: innovation, customer protection, and risk management. If you look at these 3 parameters, for any starter, just to look at it, there are 6 to 7 guidelines which are already in place. You have the RBI sandbox available, which allows any fintech company to come and innovate, try out new products and services under a supervision model. So that's addressing some bit of innovation element. There is the Digital Department of Payments and Settlements Act, which is in place, which governs the whole digital payment space in India. The third element is the clear guidelines around digital lending, the clear guidelines around co-branding, the guidelines around cyber security. Okay, there have been a good amount of push, not only just from RBI, but SEBI, even NPCI, where a lot of collaboration effort takes place in bringing the industry, banking, fintechs together to come and sit and represent their issues at various forums. So the collaboration always is running at some of the other stages. Having said this, definitely there have been, so regulation has played 2 parts. I personally, in the last 10 years, have seen more than 100, 200 regulations hitting my own businesses. Okay. I would say 60 to 70% of that has benefited us, because the way you look at it and your ability to implement that regulation or implement that change really determines whether you are going to succeed or fail. The problem that happened with certain regulations coming in, some of the fintechs or some of the businesses had a single product model. Suddenly you got a regulation which questioned that particular model. Okay, giving the examples which certain companies were doing prepaid funding and using it as a credit card. So the regulator came very heavily a couple of years back on that model. 2 months back, there was obviously issues around the BPSP model, which the market was adopting for corporate payments. So that got questioned. Suddenly, obviously, there is a rework around happening around it. So all of these regulations, if you see what the regulator again is going the messaging is, how are you keeping the distinction of innovation, customer protection, and basically doing the risk management part of it. And how much of your product construct is really available? Do you have the ability to absorb the changes, implement the product and go ahead? I think if you can do that, okay, then you can very well keep sustaining. I can assure you, I'm also have the opportunity to work in GIFT City, which is IFSCA, where we have been taking fintechs to IFSCA to talk about use cases which can be created sitting in IFSCA. And it's very encouraging when we see the response, when they come and engage with us, guide the companies, how they can do it, whether it can be an approval route, whether it can be a automatic route. Okay. So a lot of help comes in, but yes, the change, the pace at which the regulations are coming, whether it is RBI, whether it is SEBI, even NPCI, it's coming at quite a pace. So it is a challenge to managing some of it, but the underlying theme needs to be really understood what we are trying to achieve. And many businesses which were hazy couple of years back, a lot of clarity is emerging slowly and steadily as to how you should do this business. Okay, many questions are still unanswered. Okay, there are certain products where we struggle still, but that's where I think our main job nowadays. I am a sales guy, but 90% of my meeting is I provide compliance guidance to fintechs, because I don't want to build a partnership, or I can give products and services to anybody immediately. Giving an API, building 10 sites of API is no big deal for us nowadays. But what is your thought process of building a company? What kind of solution you are building? Have you thought through about it from an entire compliance journey perspective? The way regulator is thinking is extremely, extremely important in today's day. If you don't pay attention to it, okay, you put yourself in trouble and also your partner into trouble. So that's the way I would look at it. You see the messaging which is consistently coming from even the governor itself. There is an article probably every week which comes, fintechs pay attention to KYC. I think that's a very hard message which is coming, and we have been part of it. We have seen it, what kind of dialogues happen, what is that these specific products like remittances is going to be humongous. It's going to be an humongous opportunity in India. But the regulations, the requirements have to be clearly understood. And fintechs and banks can solve the problems. It's only that how you be patient, solve it properly, and then do business.
Naushad, one question for you. I think we've been saying that the regulator is also, while asking people to tread cautiously, they are also supporting the entire initiative. Banks are supporting, fintechs, infra companies like us, like co-brands, everyone is supporting. But we've always learned that customer is God, customer is king. Are these solutions customer centric? Can you just throw some light on that? Do you think all these solutions, the customer is actually benefiting, the end user is actually benefiting from this?
So I think any solution, whether it's made by the bank, made by the fintech, co-created between banks and fintechs, if they don't have the customer in mind, it's not going to take off. And a very easy and simple example that comes to my mind is the early days of NFC. Okay, we had all but written off NFC, and we used to call it not for commerce instead of calling it near field. That's how we used to define it in the old days, because there was no customer use case which was tangible, significant, and value adding. The moment that became, the same NFC has now become, the next best thing to sliced bread. So the customer at the center is the critical success factor, in my opinion, of any business in general. And the customer, for us, the customer is the bank. For the bank, the customer is their clients. And if companies like ours, in my personal opinion, for companies like ours, if we are not able to think of what the customer's customer wants, our solution becomes redundant very quickly or becomes useless. So we have to constantly think of that, so that we can go to our clients and tell them, you concentrate on getting that customer, because that's what your job is. And we'll try to write in Java at the same speed that the regulator is writing in English. That's how we are kind of thinking about this, So if we can match that, then usually it's a win-win. Having said all of this, regulation is very important. So regulation is, like Amit said, 60-70% is only good for us. And the remaining 30% actually we don't know. It's not necessarily bad. I don't think we know fully. That's my personal opinion. So that's why it's very important. Let's take everybody in India loves cricket. So we'll take a cricket analogy. Cricket was started, 200-300 years ago. Everybody played only in whites. They traveled by ship. Then they started traveling by air. Then they started playing in colored clothes. Then with colored balls, white balls. But cricket has remained the same. It went from test matches to 50 overs, 60 overs to 50 overs to T20. All this evolution has been approved with the International Cricket Council, who is the regulator, right? So it's not that the International Cricket Council blindly said no. It just took them some time to make it popular based on the customer, which is the person who views the match, but while keeping in mind the various boards of cricket control in every country and keeping in mind the interests of the cricketers, so on and so forth. Just to make it easy for us to understand. So, many people went and launched, Kerry Packer went and launched a cricket series of his own. It was great for the industry, but it was not good for cricket in general, in principle. It was making players play for money rather than playing for the sport, and so on and so forth. So that's why regulation is important, just to make it easy for us to understand. I'm trying to, use a lateral example, but it's exactly the same slightly more complex, slightly more significant, and slightly more important from a national perspective as well, that regulators play that role. So we sometimes, based on which company we work with or which industry we work with or what is our product, we may humanly get kind of pissed off with a particular kind of regulation, but we have to look at it holistically. From the, we've got to separate the forest from the trees and see that regulation from a holistic angle. And like Amit rightly said, and I corroborate it completely, that most regulations we have seen are reasonably enabling and forward-looking. And in the 2008 crisis that the world faced, India was reasonably well guarded thanks to this so-called apparently draconian regulation at that time. Had India not been that well regulated, we would have been much worse off. In fact, we were much better off than those countries that were more advanced than India, so on and so forth. So those are my views on regulation in general, and I think based on the types of transactions we do, the risks associated with them are different. When I'm sending money cross-border to another person, it's likely to be Osama bin Laden's cousin, but when I'm sending money to Flipkart, the probability of Flipkart using it for money laundering is near zero. Those kind of thoughts have to be kept in mind. And to be absolutely honest, this comes with experience, not with technology. I am personally at least neither artificial nor intelligent, so I don't understand the impact of AI yet on this business. But I don't think this is driven by intelligence. This is predominantly driven by experience, regulatory compliance and regulatory adherence, and to play within that regulatory framework is driven by experience more than knowledge. So that's my view.
So I think what you essentially said is customer at the center, but yes, spread carefully. Make sure that regulations are in place. So a quick view from you, Vasant. We've been talking about banking, and many people feel NBFCs are neglected a little in the entire ecosystem. What's your view? Can NBFCs also benefit from this, from fintech infra companies and co-brands? Is that area a little underutilized?
Yeah, I would most certainly think so. I think my theory has always been NBFCs not fully got the attention that it deserved. So I'm somebody who's been watching this for more than 2 decades now. So we talk about this famous thing called inclusion, right? So all types of banks, nationalized banks, PSUs, private banks, all of them ran some program of some sort to make sure this inclusion program takes place. The only inclusion, accounts being opened, they famously called this Jandan, I found a utility only during the pandemic time. Except for that, all the inclusion programs that are launched in the country, many millions of accounts opened, just to realize zero activity happening. That's absolutely not a sustainable effort. Whereas we know that there are about 50,000-60,000 branches available within the banking ecosystem. You will stand and look at only the NBFC ecosystem. There are close to about, give or take, 10,000 NBFCs which are fully regulated, which also means that they are compliant, and RBI has a particular oversight over this 10,000 entities. We are not fully explored what can be done with all these NBFCs. I'll give a quick example back home closer to Chennai. There is an NBFC which caters to only a particular segment, affordable segment. They go to the rural locations, which otherwise, those people don't get the credit. Let's say they go to a bank, they may not get the credit, but this particular company, I'm not naming the company, but they specialize only in going and doing this rural lending business. What that company does is today extremely profitable, very low level of NPA. The reason for that, they understand that geography, that location, topography, what do you call, all of that. We have this valuable asset, or rather valuable relationship that this NBFC is built, which anybody can depend to, not necessarily even for lending, even for looking at other distribution of other financial products and other services. To that end, I'd like to really believe that that segment is completely getting ignored. For whatever reason, all of us are familiar with this thing called this account aggregation today. It is called an NBFC account aggregator, but I think it's a slightly misleading term that they've pointed out. So, but The real intent of creating that is not to just enable the NBFC ecosystem or a banking ecosystem or aggregate only a few players in the market, but to bring everybody together, right? This could mean that all regulators coming together and creating a value proposition there, right? So that account aggregation, for example, you aggregate some 18 different parameters of assets and liability clauses and then show one view to the, let's say, a borrower or to the institution. Okay. Today, the way the banks do the underwriting, they only look at a few parameters. They don't go beyond that. That's the reason we are stuck with this 30% level or whatever. Right? There's a potential to work with all these NBFCs with the available data information they have about individuals. We can cover a lot more ground that is possible. Right? And they can become the real distribution point. To my mind, even a large bank, PSU bank like State Bank of India, they don't even go beyond tier 2, tier 3, whereas some of the NBFCs have the potential. And a lot of this, I think somebody mentioned about agri-tech and things like that. People are operating, NBFCs are operating in those domains. And whereas the mainstream is not, paying attention to that ecosystem. And I always, remember this, the moment we talk about economy, the growing and things like that, we don't create that impact at that level. Okay, that is possible if you want to lift up the economy, really, truly a real, powerful economy in the world. 2027, we talk about we become the third largest economy and so on and so forth. To me, in real time, that will happen. We start exploring more with entities like NBFCs.
Oh, great. I think that's a great insight. Definitely a lot of headroom there for fintech infra companies and others to grow. So final question to you, Abhinav. Can you've been in Visa for, like I said, for a decade, and not just in India, but you've seen some great global examples of fintech infra and co-brands coming together. Can you share some of those examples as case studies and maybe give us the reasons for the success there so that, we can draw inspiration here as well?
Sure, thanks for the question, Chinmay. Quite a few great examples of co-brands scaling up both in India and overseas. And I spoke about some of the reasons earlier about how there's a clear demarcation of roles and responsibilities, the expertise that banks bring to the table and merchants and fintech partners. But more than that, I'd also just sort of double click a little bit on the role of the merchant and the fintech, because I think one of the very critical things they bring is the power of a loyalty and rewards program. I've always believed that the success of a co-brand is pretty much proportional to the loyalty program that underlies it, which is why, traditionally the most successful co-brands have been airline and hospitality programs, because those guys got loyalty better than most other sectors. Now, I'll give you a few examples. Let's perhaps start with some examples from the US. I'm reminded of Delta Airlines. I was in the US a few years back in, I think, beginning of 20, just before the lockdown. And over there, they actually charge you for cabin baggage, right? They don't do that here. But I was taking a flight from SF to Seattle to attend something at Amazon. And Delta basically said, you have this check-in baggage, so you pay $30 for that. But while checking in, if you apply and get yourself a Delta credit card, a co-brand credit card, which I forget who was issuing it. I think it was JP Morgan or Citi, one of those. Then you get that $30 discount immediately on this particular flight, right? So that's what we call purchase path acquisition in the industry. And it's perfect because you're anyway in the middle of the purchase. You're a pre-approved customer. I mean, I couldn't take it. I'm an Indian citizen, but nonetheless, if you're based in the US, you're pre-approved by the bank and you apply for that card, right then and there, they give you a virtual credential, which you can use to pay for your ticket or pay for your seat, and you get that $30 back immediately, right? And then a physical card follows. Now, come back home to India, and you'll realize that Amazon's doing exactly that. Think about the Great Indian Festival sale that Amazon does. You're getting, 10% off, 15% off on whatever you're buying, and Amazon, who gives you an alert in the middle of the purchase saying apply for this card. Again, ICICI has pre-approved you. Apply for this card and you'll get 5% additionally back on the purchase you're already making. There's no better incentive to get that card, right? Because you're already in the middle of that purchase. You've committed to it and you get 5% back. Perfect. Nothing like it. Take the card, save it, make your purchase, physical card follows. So that's the kind of innovation that, merchants, fintechs have been able to do, and which of course fintech infra is enabling, right? I mean, without that, you can't really have those user journeys in place. So that's really, when we talk about 5 million cards issued, those are the kind of things that's really led to that kind of scale up. Now, the other thing, again, to sort of go back to one of my favorite examples is the Wyndham Rewards program. Now, Wyndham is this global hospitality chain, and they have this program which simply says you accumulate 15,000 points and you get a free night at any of our chains around the world, right? So that's the power of simplicity. Once again, we're speaking about loyalty and rewards. That's the power of simplicity in a rewards program. How easy is it to earn loyalty, and conversely, how easy is it to burn loyalty? Those become extremely important. Once again, come back home to my favorite Amazon co-brand and they'll tell you the hero proposition is nothing but unlimited rewards that don't expire, which you can use back on Amazon. So you know how to earn them, you know that they're with you, and you know how to use them as well. So that's the kind of thing that really makes co-brands successful, right? And one last thing before I sign off is the importance of banks, merchants, co-brand partners, fintech infra, and the networks working together to make these programs successful. Now I'll tell you, there's a lot of work we did when I was managing Amazon along with ICICI Bank on just driving profitability for that card. Right now, if you think about it, interest income, which is such an important proposition in any credit program, is something that is, of paramount importance to the bank, but perhaps not so much to the merchant because interest obviously accrues to the bank. But there's a lot of work we did together on just driving use cases that would drive revolve behavior, would drive interest income, right? And Amazon was equally a part of it. And so the network. Again, interest income doesn't matter to us. For us, it's just transaction link fees. But there's a lot of work we did together on just driving how we could drive revolve behavior and therefore drive interest income for the bank, make it more profitable. So that coming together of all parties involved in the product, in the business, becomes uber critical to any of these programs shaping up.
So that's a wonderful insight, Abhinav. I think you touched upon a very important thing. While we build everything for the customer, for banks, we take care of regulation. Profitability is also equally important, because without a program being profitable, it can never be successful.
Because we're talking about fintech and bank relationship, is the role of an SRO, because RBI is, I wouldn't say mandating, but encouraging to form SROs, and Anuradha also mentioned about this point. So how would SRO probably enable this entire relationship, or would it be some kind of a maybe putting restrictions? Well, there are already guidelines and everything laid down very clearly.
As I was mentioning during my regulation point also, so there are still many open areas when we go specific. So I'll take a slightly different example, gaming as an industry. Okay, we have been very closely associated with that industry for almost 7-8 years. And clearly the way SROs has been formed, which are by the industry itself, but there is also some work MeitY is trying to do itself in forming an SRO. I have been engaging with all of these entities just to figure out their objective is very simple, that whatever are the problem statements which the way government wants to look at it, other departments within the government and other areas ministries want to look at it, SRO can actually, done in a right way, can become the bridge between the two, okay, and try to solve many problems and try to become put up some standards which anybody and everybody should follow. I think the same corollary, if you look into many other areas, okay, keeping gaming aside, today there are many industries where still a lot of debates happen on each type of transactions also. Okay, whether this is doable, not doable, like remittances. Okay, the whole payment aggregator cross border which has come in has lot of unanswered questions today. Lot of unanswered questions. Now there has to be a dialogue. Now the dialogue cannot be between two different individuals, they firming up their thought process, taking their board approved policy and moving with it, it will never bring standardization. It will never. There has to be somebody coming in, forming an SRO, getting a representation from all across, and really understanding the concerns and requirements of each component of it. Then only you will be able to suggest to the regulators or to other parties ki this is how the industry should function, what should be the role and responsibility of each and every person, how a transaction should get handled, whether it is coming from Osama bin Laden or Bill Gates or all of it, what will be the necessary checks and balances that have to be in place. All of it, I think SRO can play a wonderful role in it. So you pick up, there are many areas to really work on it. So cross-border just straight away comes to my mind. Okay, so in one good thing which has happened, if you have seen the offline payment aggregation draft regulation. Now, honestly, it is a step in the right direction. So I won't be knowing how many POS machines are in this country. It would be in few lakhs. But if you know the number of physical QRs that are in this country, it's in crores. Okay. Now, should a particular QR which is stuck at a panwala shop or at a grocery shop, what amount of money should he be eligible to collect every day? And what should be a red alarm after that? Ki suppose a QR was stuck in a panwala shop and suddenly is getting 1 lakh rupee daily collection, is a alarm. But is this policy standardized across all the banks, all the companies which are putting up those QRs? I think somewhere the regulator is trying to address it. But these are some of the topics which an SRO can actually come and play a role, so that becomes a guiding principle for the rest of, and then people don't anticipate and try to, the bigger problem is when you interpret a regulation in your own way, which is slightly different from the way other person thinks, is where the problem starts.
Yeah, I'll quickly chime in. I think very well explained by Amit. I will put it this way. So there are many spaces that are not regulated yet. Okay, let's even talking about RBI trying to regulate the e-commerce ecosystem or payment aggregation ecosystem. If there are a few tens of players, it's easy for RBI to do this. Quite honestly, when we were in the process of application with RBI to be authorized as a payment aggregator, we realized that RBI received far too many more number of applications than they could really handle. Okay, so simply they didn't have the team and the wherewithal to do that. I'm not trying to complain here. I'm saying the structure that we have in place. It's always very difficult. At least this morning when we are doing a small conversation, at least all of us, or most of us, were in agreement that compliance is important. Okay, and that gives you a sense of sustainably building the businesses. So there are still a lot of ecosystem even within the payments or even mutual funds a lot and insurance, and I'm uniquely positioned to see this from different point of view. There are many areas is still not regulated. Regulation cannot be done. It can't be that the regulators can come and provide oversight or policy or whatever it is. It's always a great idea to have your own organization embracing some of these standards and then try to be more compliant, thereby securing a sustainable business, long-term business. I think it's a great initiative. I think any organization worth wanting to do long-term business